How's it going out there? It's November 10th. I'm Frank Curzio. It's the Wall Street Unplugged podcast where I break the headlines and tell you what's really moving these markets. So a lot going on these days, whether it's the election, the market coming down again, and especially the downfall in crypto, where one of the largest crypto exchanges, FTX, is pretty much in liquidation mode. So this comes after several other companies, mostly crypto lenders, had to liquidate a few months ago. But I wanted to bring in an industry insider to discuss FTX. And his name, which you should be familiar with because he's a good friend of mine, is Frank Holmes, executive chair of crypto miner HIVE Blockchain Technologies. Frank, how's it going, man?
Outstanding in a bear market.
I love the optimism. And I wanted to ask you right off the bat what FTX. To me, you know that we're both, crypto enthusiasts. We believe in long-term within crypto and Bitcoin and Ethereum. But this kind of hurt. I didn't see this coming. I don't think a lot of people saw this coming. It comes on the heels of what happened, what we saw with, the Celsius and Voyagers and things like that. And they are a very big name, and how fast they liquidate. What does this mean for the crypto market? Does this change your thesis long-term at all? And how did you feel about this? Because everyone that I talk to, even the largest players in the industry who are reporting to their people now, telling them that, we don't have exposure or how much exposure they have to FTX, I'm very surprised and very pissed off at what's going on right now.
Well, it's something that happens when you have a credit crisis that's happening. And in the crypto space, it's actually much more evident. We had something similar in China, and they call them shadow banking. And you were, as asset managers looking for higher yield when interest rates were so low, all of a sudden people were taking deposits and providing these higher yields. And that's what we saw with Celsius and Voyager. And then you had some of these hedge funds, triple trouble, it should have been called, and 3-point trouble. But you saw these hedge funds come in, and they were basically funding for quasi-banking. Then you had predatory lending that was taking place from San Francisco funds. You had it in New York. So it was, interesting to observe. This shadow banking is unregulated. And the big mistake is that when these people functioning in their metaverse, like where it's monopoly money, and they were predominantly taking from crypto people that made crypto gains and rolling it into earning a yield, they started reaching out into the real world, our world. And taking money from savers and making FDIC insurance claims like Voyager had, and rates were 1%, and all of a sudden we can give you 8 to 12. And that is just problematic unless Bitcoin and Ethereum and all these other coins keep going up in value. So you have a real crisis. Unlike 2008, when brokers were leveraged 33 to 1, and all they needed was a 3% volatility and wiped out their capital base, we're talking about 100 to 1, like long-term capital was. But long-term capital only took institutional money. The issue here is they reached across and they started taking retail money. I remember being pushed to give our coins into Celsius. And I met with the CEO, charming guy, etc. But the counterparty risk was just too great. And I said, I'd rather sell our Ethereum and build our exahash than turn around and try to grind out this 8 to 12% yield from where? I couldn't figure out where they're making it from. And then what was my collateral, my risk? So we declined going down that path. But Frank, whenever you have this shadow banking crisis, it takes 12 months, maybe 14 months before it totally unwinds. There's lawsuits, there's regulatory pronouncements, etc. And so what happened in April and May seemed to have a bottom short term in June, and now we had a rally, and now it's coming through. This counterparty risk, we just don't know. So that's another reason why we at HIVE started pulling back our expansions, want to be really cautious and careful. And then to add to it, which is really bizarre, since mid-September, the difficulty, that is more people are mining Bitcoin, that really shocked me that it jumped 20%. So that means you're making 20% less profits. So you have falling crypto prices, rising difficulty, mean less coins you're mining. Mm-hmm. And in many places across America and Europe, cost of electricity went through the roof.
So for me, the big surprise here, and I understand the liquidity coming out of the market, it's going to hurt a lot of risky industries, is it's kind of twofold. One, I'm surprised it's happened because Bitcoin was kind of stable, holding 20,000, maybe up between 18 and 21,000. It seemed like the institutions were coming in. You saw, the BlackRock deal with Coinbase. You saw Google deal with Coinbase. You saw Fidelity. I mean, really pushing this to be an allocation to 401ks. So I felt like if it was going to happen, it should happen a couple months ago, where I'm surprised where Bitcoin, for the first time, I think in almost ever, has been less volatile than the overall markets. And that was one of the things, even Fidelity took a study of why investors and even institutions don't want to go into Bitcoins because of the volatility. So I thought that was a huge positive. So on that front,
Right.
It's surprising that happened. The second front is, what do we do here about regulation? When is the regulation going to come out where we could see everything behind these companies? This is supposed to be a staple company. This is one of the largest firms. This guy, again, 30 years old, arrogant, all over the place. But you're talking about investors like Sequoia Capital. You're talking about Tiger Global, Paul Tudor Jones, Tom Brady. These guys just bought the 19-year deal with the Miami Arena for Miami Heat. The investors behind this. Third point, are huge, are massive. And it seems like they didn't even know what was going on. So, how do we prevent this? And when is a regulation come in this industry where you have to have that confidence, not just for institutions, but individual investors to know when they're investing in something that it's real and they're not leveraged behind the scenes where, you have no idea what's going on.
Well, maybe there's a turf war between the regulators. Who gets to regulate Bitcoin, a digital asset, and versus the SEC, and that's happened before. So I don't know what's happening in the Beltway, but I do know that Gensler's doing everything to try to push for regulations, and in particular to go and regulate exchanges, because that's where the onboarding takes place. And anyone that hangs himself out to be a quasi shadow banker, they should be regulated. And there's no doubt taking deposits from people and promising a higher yield is very, very risky. I try to give a simple example, Frank, that if I give you a gold coin and put it on the table, it does nothing. It's inert. And if I put a $100 bill on the table, it's just a $100 bill. But once I start providing you a yield on that gold coin or that $100 bill, like in a money fund, it's a security. And therefore, it should be regulated. And what's happened here is that the issue is, what is a security, what is not, and this debate takes place. To me, it's really quite simple. And I think that there has to be regulation, especially when it comes to exchanges, because that's where the onboarding and offboarding ramp is, and freezing up people's assets like we saw with Celsius, etc. So all I know is that in 2008, we had ushered in FASB 157 mark-to-market interpretation, and this caused Bear Stearns to be bankrupt before the first quarter. 6 months later, Lehman goes bankrupt. So you think of that process. So we had Solana, these coins blow up, Luna coin blows up, Voyager, Celsius, and in that time frame, add 6 months, and then the other collateral damage starts coming through the system. That's what we're living with. And the scary part is we don't know who's next. And I've been saying this for our strategy meetings at US Global and HIVE, that we just have to be very, very cautious and pull back on expansion, pull back on everything until this settles.
Now, the good news, and I think you'll agree with this, I speak to a lot of entrepreneurs in this industry that have companies that are amazing, that are great. I see this is where all the innovation is coming from, right? You could say AI is, just we're having extensions of AIs, right? AI is not a new concept, but just the amount of innovation and creativity coming out of this space, to me, is unbelievable. How do we get to that point where, not just on the regulation front, but how do we get to trust this industry again? Because like you said, I understand, and I've been through the liquidity crisis as well and been through a lot as well. I've been doing this for 30 years. When I saw everything blow up and, crypto's been going down for a while now, and then you see 3 months ago, a lot of it coming out of lending, and then you see the stabilization, you figure, okay, a lot is done, but how do we get that confidence back? Because, I'm looking at this, well, wow, this is a real surprise to even the people who are dialed in this industry. And how do you get people in good projects? Because what you really want to do in industries like this, just like .com, is when that crashes, the guys who survive are the kings. We thought FTX was one of them because they're going out there trying to purchase everyone, right? They're making deals with everybody, BlockFi. I mean, I go through 10, 15 different deals with them and bailing out. But, where do we get to the place where, okay, we know we're close to being done with this, especially if it's a credit crisis and the Fed's going to continue to raise rates? Is this going to continue even longer? Because I think that would ruin the confidence of people really coming into this industry, especially newcomers who every time they want to come in, they see another major firm blow up.
There's no doubt, Frank, and I think you've been through these experiences before in these cycles, and this is a credit crisis. We've had rising interest rates, and there's been no 10-day low. We've had gold jump above the 50-day moving average and then fall below, and then spiked up again this week above the 50-day moving average. But what's interesting is that we've not had a 10-day low in 2, 5, and 10-year government bond yields. And you're going to have to get the bond yields dropping and all of a sudden trending down before we're going to have a sustainable rally in the stock market or gold or crypto. And right now, it's still, we talked earlier, it's rising interest rates. And embedded inflation is definitely significant with a lot of climate change policies, how that's embedded inflation. Powell said that a lot of the infrastructure spending is very inflationary. So I saw what happened in Canada. They put about 25% carbon tax. And immediately at the gas pump to any business, there's a 25% gross margin taken away from you. And so where is this all going? We're going into a very slow recession. The crypto is ahead of the game. Crypto is saying to you that this is a severe credit crisis. I heard that when Twitter, the acquisition by Elon Musk, ran into big financial borrowing problems. So you're seeing capital is seizing up for, doesn't matter if it's Twitter, we're seeing that the market punishes, like I just wrote about Meta, which used to be Facebook, spending billions of dollars of their free cash flow on the new Metaverse. That hasn't kicked in yet. And because their free cash flow drops dramatically, the stock drops 25% overnight. No longer is it really a FANG stock, nor is it in the universe of the CEO. Zuckerberg loses $100 billion of paper valuation. So we are in a real serious credit crisis, and it's slow. Even though it's the fastest rise in interest rates, the money that was put in the economy and after COVID is still going through that churn. But I look at JETS. And JETS to me is a really fascinating leading indicator. And as you remember, during COVID, it fell. And then all of a sudden, the volume went from 40,000 a day to 400,000 shares a day to 800,000 shares a day. It goes from $11 to $28. So as the vaccine starts rolling out, JETS is going up, up, and up. But the airline stocks are losing money by the tune of billions of dollars a month. And now they've turned profitable, but JETS is down. And there's a big pricing power that's in the airlines because they have less pilots and they have real tremendous pricing power for a ticket. You think you could buy a ticket 6 months out and get a discount? There's no discount. It's expensive. And so what we're seeing is that it's warning you that there's a slowdown coming. And even though people are paying big tickets now, everyone's going to hotels and tourism. JetBlue buys Spirit because it wants to have all that tourist travel, that business tourist traveler on the East Coast. It doesn't matter. The market is a discounting mechanism. And I really love JETS because it's so liquid and it's giving you a good feel for where the future is. And by the time the bad news starts coming out, JETS will be turning up.
Yeah. And by the way, for those you don't know, this is our time hearing about Frank. If you're a long-term shareholder, you know that Frank and I are good friends on the podcast a lot, but you created the JETS ETF. It's the largest ETF that focuses on airlines for U.S. Global. You mentioned something in the middle of that, which is the Metaverse. And 2 weeks ago, I wanted to have you on to talk about that because I think there's just this misconception about the Metaverse and how it's nonsense because of they're watching Meta as that test case. And for me, being in this industry and seeing the projects that are going on with open metaverses, owning your own content and just unleashing creativity where people, whatever they build, whatever they could create and they could sell their own, right, on their own, where it's not a one-way street to Facebook, Roblox, and things like that. What are your thoughts on the metaverse? Is this a trend that, because again, everyone knows Facebook, they have how many billions of users, right? 3 billion plus. But to me, that's not the definite. That's a virtual platform, and I wanted to get your thoughts, which was what this interview is supposed to be about before FTX really blew up. So I'm glad you came on. But talk a little about the metaverse and what you're doing there, because it seemed like you were optimistic on it. I wanted to hear your thoughts, your honest thoughts about it. Do you think it's for real? You think it's going to happen? How quickly? And let's hear about it.
I think it's early. And the article that I wrote a couple of weeks ago was trying to walk people through that there was a tablet before, there was an iPad, and the tablet was successful for moments and then failed. And so some of this technology, like the metaverse, it's real. The kids that are doing gaming all over the world and virtual reality and the games they play, it's for real. But I think he's very early, and that's what he's living with, being early. But what's interesting is that the bottom of the last crypto cycle, we had a big bull 2017, a bear 2018, and the bottom took place just after JP Morgan, which was talking negative, all of a sudden started talking positive. They came with their stable coin, and Facebook announced their own digital currency, their token. And immediately you saw the G20 finance ministers do a pile on. I mean, just a bang, 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 bang. And it was just shocking to see how frightful they were of the significance of Facebook's 2 billion followers all over the world and having a new currency, a new order. So he was early there and got punched out. And so maybe when he went to pivot, he should have just gone a little slower in his pivot.
So let's change tunes here, because I'm glad talk about crypto, and maybe one last question on crypto before we go. What do you say to investors right now who are losing confidence in this industry, an industry that again, with HIVE Technologies, these guys done incredible things. How do you tell them to invest in this industry?
I don't think so. I think that it'll be a pulse with these conferences, Frank. They're still sold out. And people spending $1,000 a ticket. Consensus, it's like going to the country club, and you just can't walk into a country club. You have to pay $50,000, $100,000 to join, and to join, you have to go through this incredible process to be able to join. Consensus is that way. You can't call up and say, "Hey, I want to go to your conference, and I'll give you $2,000." Sorry, not invited. Only those who are proof of stakers and those in the Ethereum ecosystem. And it's really fascinating. They're sold out. So the Bitcoin, I was recently in Amsterdam, and it's the first time they did one in Europe, and they had 3,000 people. 3,000. Like, it's just like, and Bitcoin this time last year was 60,000. It's now 20,000. Can you imagine gold going from down 60%? Do you think anyone would come out to a Cambridge Gold Conference? No one. No one. And it's free. But they're here, they're still spending the money. So it doesn't matter if it's coders coming together. It doesn't matter if there's a lot of still capital going into this sector, into the blockchain, and how the new sectors will evolve, the metaverse, gaming, blockchain gaming. So I don't think it's going to go away. I just think it's going through a real tough cycle where it was over leveraged, over promised. In 2018, it was all they call the shit coins, the tokens that came out. And they were all hype. So they closed those down, and then we come out, and now it was leverage. Let me earn interest. I'll give you interest on your money. That cycle's gone. So I think the new cycle will be stronger and better than ever, as long as you have the cash and reserves as a mining company to weather that storm. Most of our peers have leverage up to here at 12%, 18% interest payments, and their equipment. So all their ASIC chips. So some guys are turning around. One of the crypto mining companies are telling one of the lenders, we're not going to pay you right now, but we're going to keep the machines. You can't get them back because we got to make money with them. I mean, just whoever heard of that's going on. And so you're seeing that all the expansion in Texas, which was supposed to be a gigawatt, that's gone. It's history. You're seeing now pricing of electricity in Georgia and these other states popping much higher. I think in electricity in Texas, if we weren't hedged out, is now running hedged 7 cents a kilowatt. Well, you can only make 9 cents if you have the latest S19 Pros per kilowatt. So you have a very little margin. So I think that you make sure you have lots of cash. You watch your cash very importantly here, and don't have any serious leverage where these creditors can come in to try to be predatory on your assets.
Yeah, and I was going to switch tunes, but I like where this is going. And I guess a couple more questions here, which I think people will be interested in. What do you think is going to be the biggest markets within crypto going forward? Do you think like DeFi, we're seeing you take a step back where people are like, okay, we need some kind of centralization, some kind of people watching, but is it NFTs, Metaverse, DAO? Where do you see the huge growth potential in this market that's not yet realized?
Well, there's some really fascinating things like that I see in the NFT space. Friends and investment we have I have joint friends with the Hockey Hall of Fame and in Canada and NHL players, and what they create art, and they create an identity and an NFT. They create a value. Another interesting one that I've seen is where the NFT would be backed by gold, but each NFT would have a smart contract, would give you the number on it, and it would be iterative gold art. So they would be using artificial intelligence. So each piece would be different, but it would have an intrinsic value of gold behind it. So you know that you always, now the art, it can be worth more if someone really likes that iterative piece of artificial intelligence art, and each piece is different. I mean, I think that type of stuff's really cool. But you know that you always have some type of an intrinsic value based off the price of gold that supports it. And then there's the artistic appeal behind it. And the ability to trade 24/7 is where NFTs are going to go all over the world, just like Bitcoin. So I think there's some really fascinating opportunities in that space.
No, it makes a lot of sense. So, all right. So, let me give you a chance to talk about a little bit about Hive, which, any new investors and everything. I know you guys focus on really the green portion of that, which I know you've gotten booed in the past because you thought that should be different with the Bitcoin, Ethereum, things like that. But talk about some of the things that you do with Hive, because we are seeing a lot of things really get nailed here. And hopefully you guys watching this on YouTube with the hat that you just put on, which is awesome, which I love. But
for all your listeners, for all your listeners, they reach out to you and give us their contact, and we'll get them a Hive hat with a Gucci bee on it, as I'm told. But it's really our own bumblebee. And what I try to tell people is to remember, I got the right side, hold on for dear life with this volatility. That's all I can share with you, is that we run a conservative company. I've been through many crises. We have a great team. We made a lot of money with Ethereum, but we never got paid for it. We never got a multiple. We had the cheapest earnings PE ratio because we're mining Ethereum. That's gone. So that does impact the margins, because everyone knows what the margins for Bitcoin mining. It depends on your electricity costs and the quality of your machine, the efficiency of that machine that you have. And if you say you've got X exahashes with S19 Pros and your cost of electricity is a nickel, it's so easy to calculate what your cash flow is going to be. That's really simple. And so it does. What we do know is that we were trading at 6 times earnings when our peers are trading at 40. So that high margin business is gone, but it's allowed us to build out build data centers, and put a 2 exahash on our balance sheet and income statement. So that's what Hive does. It mines Bitcoin. It mines only green energy. But some real cool stuff I got excited over when I was in Europe, because in Sweden, we're looking at 90 square foot greenhouse, and we'll take the heat from our data center and it'll heat water, and then the warm water will turn around and provide produce, and it'll be red peppers, and which is a high income product. It'll also be tomatoes and cabbages and lettuce. So it'll provide all the food for the northern part of Sweden. No carbon footprint coming from Italy or Spain. This is in motion. And I saw it in Amsterdam, and I was blown away by it, literally blown away, because I saw 2 megawatts heating this huge water facility, and walking in, and it was 8 football fields, Frank, 8 football fields, and the yellow robot machines going up and down the aisles. It looked like for miles, and you can see them, and there's picking all these red peppers. And the only human beings really involved were the ones who were sorting a quality red pepper, because women could tell and men better, which by touching and holding it, good, bad, good, bad. And it's a high margin business, and they provide it all for not the jalapenos, but the paprika peppers. So it's coming from a facility, and they only use 10% of the water. Robots recycling that same molecule can be recycled to heat. Now, we're doing that right now in Montreal, in Quebec. We take from a 40,000 square foot repurposed graphite building, and we're mining, and we're taking the heat to heat a 200,000 square foot building, and it has 175 employees making whirlpools for Quebec. So we know this engineering, we know it's going to happen. And now we're planning for the hockey arenas in northern Sweden, that we strap on a 2 megawatt facility right beside the hockey arena, and we can save $100,000 to $200,000 electrical bill and be mining Bitcoin. As long as electricity is inexpensive and we have the efficient machines. So we are doing some of this stuff in North America. We're only green. But we see a huge opportunity of repurposing Bitcoin manufacturing.
That's fantastic. And last thing here before you go, you have an event that is taking place on November 30th, Going Digital, Investing in the Future of Bitcoin and Blockchain. I think it's even more important now with everything going on. It's sponsored by HIVE Blockchain. You have great guests. I know Daniela Cambone, who's interviewed me plenty of times. Awesome. She's going to be a co-moderator with you. Mark Yusko, big name. Very, very entertaining and speaks his mind. But Eric Wade, you have Mike Malone. I'm going to be there as well. Talk a little bit about that. And if people want to sign up to it, how can they do that?
You can sign up by going to HIVE Blockchain Technology. And I think what's important here is that by the end of this month, we'll know exactly what the landscape is for the elections. And we'll have policies by then, I'm sure, coming out for crypto. And what will that mean? Because regulatory, no doubt, has been a headwind this year, a challenge for a lot of the crypto mining industry. So we want to know what the clarity. We'll try to help investors navigate through what those issues are, and remind those for new people that are looking at them, what is Bitcoin? What is it good for? How has it evolved? And where do we think it's going to go? But more important is the political landscape, because we talked earlier, we need some regulation, some defining rules, especially for these exchanges and these shadow banks, what they're allowed and not allowed to do, to stop this sort of the disaster that's just taken place, and give that clarity going forward.
Yeah, it makes a lot of sense. Well, Frank, I know you're busy these days. I really appreciate you coming on. Good friend. Love our conversations, and hopefully you'll come on soon.
And wheels up.
Wheels up for Jets. You got it, buddy. I'll talk to you soon.
Take care.
Okay. All right, guys, that's it for me. Real quick here, a lot going on in the crypto space. Frank is just a great, great guy, and I went to the Boeing facility in Washington, invited me to ring the bell New York Stock Exchange to launch his gold ETF, Go Gold. The enthusiasm that he has is just is incredible, right? It's just someone that's willing to learn, has been through all this stuff, and you can see him, he's always excited when he comes on. But just a really, really good guy, and and a really good friend. So I'm glad he's been in this market for a while. You could tell because he's not as leveraged or not leveraged like everybody else. Getting more reports on FTX, everything that's going on with that situation. So I'll be reporting more back to you with that. But for me, real quick before I go here, is just the frustration here. We thought we were like past this point, and getting more people into crypto, especially what we're doing, and just the people that I would talk to, especially in the metaverse, is so exciting. And then you see this, it's a setback, right? People just like, wait a minute, they just seized like $3 billion on Silk Road, and we just saw Celsius and Voyager, which is a good name. We're not able to see these numbers, not enough regulation, and you're finally seeing the institutions come in, and so many people were invested, so many big names invested in this exchange, FTX. It's incredible. But there are going to be clear winners. And when you look at markets like this is a time where, if you're a believer in crypto long term, this is a .com in 2002 when the market crashed 75, 80%. And the survivors, if you own any of them, you probably own your own airport. You own 7 houses, 8 houses. This is an opportunity. Again, this is where the innovation is coming from. It's been painful just to see this, even for me, because it's very, very frustrating as someone who believes in crypto. But Hopefully this strengthens the industry. Hopefully we see more regulation behind the industry within crypto. But if you're looking at companies like Coinbase that has no exposure, 5.5 billion liquidity, I saw some asshole go on TV yesterday. Sorry to curse. I always say sorry when I curse. Just say crypto. They have exposure and just naming companies that have exposure that I don't have exposure to FTX, which was frustrating. And I'm like, they have 5 billion in liquidity plus, and they had to come out and say that. But you see, even Binance as well in a great position when they're not as leveraged. There's a lot of companies out there that may be a good position. We thought FTX was that name since they were purchasing so many assets, which is incredible. I mean, you're looking at it, and I wrote some of these things down. It was just the number of assets. I mean, you're looking at Scaramucci, right? They invested into Scaramucci's Skybridge Capital, which they was going to be sponsors of their Seoul conference in Bahamas and North America and all over the place. You're looking at the BlockFi, right? BlockFi when 3 hours went under, FTX agreed to lend them $400 million and actually looked to as a credit facility and said, we're going to purchase you with a clause they could purchase them at a certain price. Blockfolio, Ledger X, Liquid, September, it was Voyager that they bailed out, Bitvo Exchange in June 2022. And again, September 2022 was with Skybridge Capital, Scaramucci. I just watched that interview with Scaramucci. Scaramucci I've interviewed on this. He's a big name, very, very powerful. I think that fund was like $4 or $5 billion or whatever, but he said, they're taking money into it and $40 million was going to crypto companies on his corporate balance sheet as long-term investments. A lot of that stuff's probably down incredibly. So I think you're going to still see a fallout from this, especially, it's not over. It's not like, okay, Bitcoin, you're going to see a lot of more companies come out. Their legs extend very, very far in this industry, and I'm really starting to dig in to see it. Just a $25 billion valuation round in October 2021. 6ix9ine investors, you're looking at Ontario's teachers' pension plan invested in this. Again, this valuation was very small at the time. You're looking 2 years ago. This is a company that was a $1.2 billion valuation. So this is like 2021 when they raised this. You're looking at BlackRock, Paul Tudor Jones, Tom Brady. Then you had Tiger Global, big investors in this. Just the names go on. And in January 22, when they raised money, it put a massive $32 billion valuation on this thing, right? So you're seeing this company that's spending, and you're seeing this guy go around and talk a lot and stuff. And just see this is definitely, I think it's going to be a setback. I think you're still going to see liquidity. Those tentacles are going to stretch into areas that you're going to see. You're seeing Solana, which is a really good company that had exposure to this. You need a lot of this to filter out of the industry. But at the end of the day, you're going to be able to get some really, really great projects, some people that we're talking to, and we're going to get unbelievable deal terms now because it's very difficult to raise money. Frank and I were talking before we went on. He said how the M&A market's down 90%, and that's going to continue next year with the Fed continuing to raise rates. You're not going to see lots of IPOs. It's going to be almost impossible to raise money unless you have fantastic ideas. But it's going to put us in a position as some of these companies and good names come into us, as we vet them, we could really dictate those terms at a point. We're going to be getting founder shares. We're going to be getting equity at dirt right at the bottom. And that's how you make an absolute fortune. If you talk to Marin Katusa, if you talk to Doug Casey, if you talk to all those guys in those industries, the reasons why they made fortunes and fortunes and fortunes while gold has not been a great market, let's face it, for a very, very long time, is when you're getting founder shares, it's like getting shares in SPACs at $2, $3, where you don't care if it goes from 10 to 7, you're still making a fortune. You're hoping that you get something like DraftKings that goes at 30, 40 or whatever, and then you're making absolute fortune. Instead of buying one house, you buy 3 or 4 of them. That's the opportunity we're going to have in crypto, and that's the exciting part. But for this, very disappointed. I'm surprised to see this. I know Novogratz came out and said he was surprised. This is the guy that's been in Washington lobbying. He's one of the biggest donors of the Democratic Party, which I thought was a good thing because the Democratic Party, regardless of what happened with the elections, is staying in power because he wants to be part of the regulatory structure, which along with CZ and Binance, so they've been spending a lot of money politically as well. And just to see this setback, it's really a slap in the face. A guy that spent a lot of time in Washington, it really is a slap in the face. So let's see how this plays out. I'll be there for you, even with our crypto newsletter. A lot of stuff is going to get hit, but it's going to open up the door to lots and lots of opportunities. I want to thank Frank for coming on. I'm going to try to get on a lot of other people, insiders that really know everything about the situation. Break it down. Yes, we know it's going to be painful, but how do we make money? Who are going to be the survivors? I think Coinbase is a fantastic position. They have tons of liquidity. Most of their trading comes from institutional investors. And this company got nailed 20% basically because, people think that they have exposure to FTX, which they don't. So, Novogratz got hit a little bit. You're going to see, Binance is doing a good job. I don't know if that deal is going to go through, if they're going to buy the assets. If they do, they're going to buy them for very, 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 dirt cheap numbers. But let's figure it out, see what's available. And I think we're going to find some really good opportunities to this, right? You don't have markets like this often. And this market is really, the confidence in this market has really come down to the point where everyone's going to be selling a lot of stuff. And it's going to provide lots and lots of opportunities. And I'll promise I'm going to bring those opportunities to you, as many as I can. So questions or comments, I'm here for you. Hopefully you enjoyed the interview. Again, I always say this podcast is about you, not about me. Let me know what you thought. FrankCurzioResearch.com. That's Frank at CurzioResearch.com. And as always, thanks for the support. I'll see you guys next week. Take care.